One of the biggest hurdles and obstacles facing home buyers today is student loan debt. But what if you, as a homeowner, could help your family by using your mortgage as a financial tool and using your mortgage as a way to pay for college education, thereby completely foregoing the need to take student loans? In today's lesson, I'm going to talk about these strategies and exactly how you can implement them. Hi, it's Robert Weinberg, and on this channel, we empower people to take control of their future through expert mortgage and financial strategies. In this lesson, we're going to talk about using your mortgage to pay for a college education. Now, most people, when they think of college education, they think of student loans. And like I've talked about in other videos, it's been a huge burden on first-time home buyers and really making it difficult or impossible for them to buy homes because of this student loan debt. So with that said, if you're a homeowner and you've got equity built up, why not use that equity to actually fund the college education? Take that burden off of your family and allow them some flexibility in their future. So you can avoid the student loan debt altogether by using that built-up home equity for educational expenses. And really two main ways that you can do that, which would be either with a cash-out refinance or a home equity line of credit. Now, for most of my clients, a cash-out refinance is absolutely going to be the best way to go. And the reason is that a cash-out refi, in most cases, if it's structured properly, is going to be a fixed rate. It's going to be a rate that will not change and will not increase, and in many cases, it's going to be far lower than you could get on a student loan, especially a private student loan. The other reason that a cash-out refi is a great option for college education is because it's an amortized payment. So every single month when you make that payment, some of the money is going to go to interest, but the principal is also going to be going down little by little over the term of the loan, versus a home equity line of credit. And a home equity line of credit, while it may look good on the surface, has really two main issues. Number one is it's a variable rate, so it can change periodically based on the prime rate and whatnot, depending on how it's actually structured and the contractual agreement you have with your lender. But no matter what, it's going to be a variable rate where it's going to change. The other really dangerous thing about a home equity line of credit versus a cash-out refi is that the home equity line of credit is an interest-only payment. So they're going to give you this payment, it's going to look really low and good, but if you just pay that payment, no money's going to principal. All the money's going to interest. So you can find yourself in a position where you've been paying for 5, 10, 15 years, and the principal of that loan has not gone down at all, and it can really put you in a bad situation, in a bad predicament when you've been paying all these years and you're not seeing that structured amortized payment going down like you would on a traditional mortgage, which we'd implement with a cash-out refi. So with that said, we're going to focus on the cash-out refi, and one of the big things you can do to really maximize your benefit is to combine that refinance with a term extension where we stretch your term back out and or a rate reduction. So the rates now are very good. You might be able to actually take that lump sum of cash for the student loan needs, or the college educational needs, I should say, and reduce your rate in addition to that all at the same time, which can really give you a great situation and a great benefit. So let's dive deeper into that term extension. Depending on how long you've been paying on your mortgage, you might be able to keep your mortgage payment the same or just have a minimal increase. In some cases, you might be able to even decrease your payment, even with receiving a significant cash out payment from closing. And when I say significant, my clients that I implement this with have received anywhere from $30,000 upwards of $100,000 in cash out from closing and have seen a little to minimal increase in their monthly mortgage payment. And why would that be? Well, if you've had a 30-year mortgage, let's say, and you've been paying on it for 10 years, now you have 20 years left. So we look to implement this strategy. We're going to take your mortgage from 20 years and we're going to stretch it back out to 30 years. Why would we do that? Because by stretching it back out and tapping this equity, it's going to give you that minimal increase, if any increase, in your monthly payment. If we kept your mortgage at the same amortization schedule that you have now, in this example 20 years, then you may see a significant increase in your monthly repayments on your home loan. So that's why a term extension can make a lot of sense. And as I said earlier, if we can reduce your rate as well, even a small amount, then that's a double whammy and the cherry on top. And it really makes this whole strategy worthwhile if we can get these other benefits as part of it as well. So I did hear recently that I think it was 87% of retirees have most of their wealth trapped in their home equity. And when I say trapped, I mean it's just sitting there, it's doing nothing for you, it's sitting dormant. So if you're in a situation where you've been in your home for a while, you've had this equity build up, and you're now looking at student loan strategies, college education funding strategies for your kids or your family members, then this could be the best solution for your needs, because your equity is earning you 0% rate of return. And by actually using this method to take that equity out and help fund this college education, you can not only help your family members, okay, by taking that burden off of them of these student loans, but you can also take that asset that's earning you 0 and reposition it to actually get a nice return by helping them with their college education. So I really hope that this helps. If it's your first time watching, please go ahead, hit the subscribe button. Also click the bell so you get notified on all of our future content. You can follow me throughout social media, and you can also call or text my office directly if I can be of assistance to you or anyone that you know. Take care.